are you cheating yourself by using IRS mileage rate? So if any of you were buying cars, were looking to buy cars, have cars in service in your business, you might always wonder, can I take the best use of my car? Am I using everything that I can for my car? So today we're going to talk about a couple of different things, what you can do with your car. So, let's take an example. I hope to make it really, really easy for you, but I just want you to see in a real example. So let's say you buy an SUV for $50,000 in 2022. This SUV would qualify for both Section 179, expensing, and bonus depreciation. So let's say you drive the SUV in 2022 for a total of 15,000 miles during the year, right? Which is about 87% business miles. Now, let's say that, to qualify, or you qualify for the IRS mileage rates, which in 2022 from January to June was 58.5 cents a mile. And from July 1 to December 31st was 62.5 cents a mile. Okay. So, the other pieces that we want to take into consideration is you plan to use this SUV for 3 years, and then you're going to trade it in and you're going to change and get a new car, right? So then the questions would be, would you be cheating yourself by using the standard mileage rates, the IRS we just talked about? Number 2 would be, if so, how badly would you cheat yourself? And number 3, is there an easy way for you to know what's best? Is it to be mileage rate, or what alternatives do you have? So let's go through these questions really quickly. We want to make sure that we're getting to the point with this, and that you understand how to approach this type of decisions, right? So based on all these facts, you would be cheating yourself. Why? Now, the basic reason why you would cheat yourself is, when we do the math, right? If you choose a standard mileage rate, with giving the miles that we just said, 15,000, you would have lost about 5,712. We did the math, right? How this would work. This is real money, right? As some people would say. So if there's any easy way to do it, we use calculators to do this, right? So how can you do this? Would it be useful for you to have a calculator like that, so you can just plug it in? Let me give you a couple of pieces that we do when we use calculators like that to look which one. I call this what if scenarios. What if I do this? What if I do this? What's the result, right? So what kind of numbers we plug in, to get a real result in a calculator like this? We look at what's the bonus depreciation, right? We look at Section 179. What could you have? And any type of ownership cost over that period, right? So in this case, we computed about 58 grand. That would be the total cost, right? We look at the mileage, we look at all of this, in the end, we come out with after tax, cash is $5,700. So, a calculator like that will give you a true result on really what makes sense. Now, let's talk about a few components that are really, really critical to see, do I even qualify for mileage rates? Many people think that anyone can use IRS mileage rates, where in fact, that's not entirely true. So now, if that's the reality, we're looking at who may not use the IRS standard mileage rates. Okay, so you can use it if you have a fleet, or what we call 5 or more vehicles on the road at the same time. That is one. Number 2, if you lease a vehicle or don't use the standard rate for the full term of the lease, you can't use it. So if you're going to lease, you have to use that standard rate for the full term of the lease, whatever, 3 years, 5 years, whatever that is. Now, number 3 is if you claim Section 179 expensing on the vehicle. So if you, let's say, year 1, you say, you know what, I'm buying this for $50,000. I'm going to do Section 179. And then year 2, you say, you know what, forget this. I don't have depreciation. I don't have Section 179. I'm going to switch to IRS standard mileage rate. That does not work. So that was number 3. Number 4, if you claimed any depreciation on the vehicle under that straight line over the estimated useful life, you can use it. Or number 5 would be if you use the vehicle as an employee of a U.S. Postal Service to deliver mail or rural rates. So that's really doesn't apply to majority of the people. We're going to leave that aside. Other things or entities that cannot use the standard mileage rate would be corporations. If you are a corporation, you may not use the standard mileage rate to deduct the corporate-owned vehicle. Okay, but how we use it in a corporate side is if you have employees or you reimburse employees, and we hope you have an accountable plan in place, right? You can use mileage rate to reimburse your employees for the business use of either the corporate owned car, or you can use that for reimbursing for their use of their personal cars. Now, what if you're a partnership? Right? As a general rule, partners may not deduct the expenses of a partnership on their personal income tax return, even if the expenses were incurred, by the partners, for the interest of the partnership. So under that same rule, the partnership may not use the IRS mileage rates on partnership cars. So partnerships have very specific rules. So if you have a partnership, really take a look at what can you do, when can you do it, okay? But let's say under the partnership agreement, the partners are required to pay a certain partnership expense out of their own funds, then the partners would be entitled to Section 162 deductions for the amount of all these expenses. So, just know the rules that you can do so much more than you think you can just by understanding what's available to you on the type of entity you have and what kind of expenses do you have. Now, let's switch to a really, common theme that I see. People keep switching methods. Okay, so when you choose the actual expense method, that means I'm going in every year and saying, this is my expense, on the car, my depreciation, my maintenance, all the things that I do to maintain the car. That is the actual method, right? Actual expense method. That's the method for the life of that car. You can go the second year and say, you know what, I don't have that many expenses this year. I'm just gonna use the standard mileage rate. That's a big no-no, okay? So don't do that if you don't wanna get in trouble with the IRS. But that is not true when you start with the mileage method, okay? So if the IRS doesn't like it to make it more complicated than that, when you start with the mileage rate, you can switch to an actual method, right, under specific rules, right? And we can go into more detail on that. But that's so fascinating, right? So one way it works, the other way it doesn't work. So always keep in mind, what do I have? Have someone you consult with that you always know what the rule is. Listen, the people who win are the ones who knew the rule and knew how to play with the existing rules in place. It's not cheating on the rules. It's not going around. It's like knowing the rule and how to play with what's in existence on the rules. So what are the biggest takeaways for you today? So one of the most common thing I see, okay, you're self-employed, you may use the IRS mileage rate, okay? If you're a corporation or partnership, do not qualify to use the mileage rate on corporate or partnership-owned vehicles. If you qualify for your IRS mileage rate, make sure you use a calculator or someone like that knows how to compute that and to find out which method suits you best for what you're trying to do. Now, let me tell you why, just having your tax prepared tell you which method is better. And I'm talking to you as a CPA who we prepare tax returns every single year. So when you come to us and do it that year, it's the tax software that we use only tells you 2022 or 2021 or whatever year we're doing right now, if one is better than the other. Now, in planning, what we do, the what if scenarios, how I love to call them, what we do is we actually look at various numbers of years. So we layer which one is best. So to make the best decision, we need to look at all the years and the gain or loss on a sale. Now, if you already are using the IRS mileage rate and you find that they're hurting you, you can switch to an actual expense method, right? By following some of the rules. But that's really what you need to know, right? Can you use it? Can you use the standard mileage rate? If not, if you don't qualify, stop using it. And is it more efficient or beneficial to you to move to an actual expense method? So I hope this is useful to you. I would love to hear your feedback. So if you want to take a moment and just share with me, what are your biggest challenges? People buy cars. We sell, we trade in the cars. We just let it go. This could be a big factor, like, it might not be, $30,000. It might be it might not be $20,000, but it could be $5,000 to $10,000 they come back in your pocket by using the right methods in all the years that you have a car. So I hope this is useful. Have an amazing day, and I will see you next time.